Intraday traders. Investors rode the global investing roller coaster last week as US and China started their intentions to defend domestic markets with reciprocal tariffs. The S&P 500 fell 1.4%, giving back most of pairing last week's 2.1% gain, while the US dollar index rose 0.1% for the week. The S&P 500 plunged 2.2% Monday after China announced penalties up to 25% on 106 categories of U.S. goods overnight, coming into effect Monday. It rebounded 1.3% Tuesday and extended gains 1.2% Wednesday as payrolls processing from ADP reported that the private sector created 241,000 jobs in March, far more than expected. The broad market index added 1% Thursday as markets calmed on possibility of negotiated settlement of the trade dispute as US and China mentioned they were ready to conduct talk. The S&P 500 tumbled 2.2% Friday as China responded, saying it would counter U.S. protectionism to the end and at any cost, after President Trump said late Thursday he was considering imposing tariffs on an additional $100 billion in imports from China. The US dollar index retreated Wednesday and Friday, advancing three other sessions last week. It edged up 0.1% Monday, gaining 0.2% Tuesday, followed by 0.1% pullback Wednesday as the Institute of Supply and Manufacturing reported its services index fell to 58.8 in March from 59.5 the previous month. The dollar index rose 0.4% Thursday but slid 0.4% Friday on sharply weaker than expected jobs growth. The U.S. economy added 103,000 jobs in March, the lowest monthly growth in the last 6 months. Developments in U.S. and China trade relations after announcements about plans to impose tariffs on bilateral imports will remain in focus this week. In economic data, important inflation data from China, Japan, and the U.S., as well as Fed's March policy meeting minutes, will be released Wednesday. Happy trading. See you next week.